Really nice to be here. As Jono said, I grew up in the Valley, so I never expected the Bitcoin community to be this large in the Valley. So kudos to you guys for putting it together. This is really cool. I left here, I guess 7 or 8 years ago. Went to Waterloo and got into Bitcoin over there. I originally worked at a company called Consensus, which is actually an Ethereum company, but there was a bunch of Bitcoiners on my team, and they really got me down the Bitcoin rabbit hole. Before that, my dad originally got me to Bitcoin back in 2014, but I've been on the technical side building using the Bitcoin protocol for the past like 5 or 6 years. So I'll chat a little bit about that, but first I wanted to chat about Lightning. For those of you that might not know how Lightning works and why is it important for Bitcoin and how does it actually scale Bitcoin. So I guess I already said about me. So what is Bitcoin? I mean, all of you probably already know this, but obviously no central authority, 21 million coins, transactions are irreversible, open source code. So it's scarce, it's durable, it's divisible, and it's portable. Obviously, there's a global network, right? You've got thousands of computers worldwide that run the Bitcoin software. If I have if I have 1 Bitcoin, what determines that I have 1 Bitcoin? It's that there's 10,000, 20,000 other computers in the world that all agree that I have those numbers. It's not TD Bank, it's not RBC that determines that I have that 1 Bitcoin. It's those 10,000 computers that are all running the same software, and they all have consensus. And yeah, it's just everyone agrees on the same rules. But there's a scaling problem with Bitcoin, right? Bitcoin can only process 7 transactions per second. If everybody in the world wanted to create a Bitcoin transaction today, 8 billion people wanted to create a Bitcoin transaction, it can't happen. There's not enough space. Like, think of that. If 8 billion people are creating transactions, imagine if everybody's computer at home needs to go and validate that. That's a ton of information. It's insane. So on the other hand, Visa can obviously do 65,000 transactions per second, MasterCard 45,000, even PayPal can do 10,000 transactions per second. So how are we going to scale Bitcoin to the entire world? How are we going to make it so that everybody can really easily use Bitcoin and it's can be relatively cheap? And then that's the other problem too with Bitcoin, right? You only have a block every 10 minutes, right? So every 10 minutes, you have a block that comes through, which means it gets confirmed. So sometimes, there's lots of merchants, like if they accept Bitcoin on-chain, they like to wait for that confirmation just to make sure, hey, did that transaction actually go through? So.
Can you highlight that last point?
Oh, yeah, sure. Yeah, 7. Oh, this is a feature, not a bug, right? So. Bitcoin is slow, but it is secure and decentralized. So what that means is that it's easy for anyone to be able to run their own node. So it's easy for anyone to be able to run their own version of the software that is able to validate all the consensus of Bitcoin. So there's other blockchains that are very fast, right? The first one out, I think, was like Litecoin, right? They reduced the block time to 2.5 minutes. But everyone since Bitcoin has just tried to go out there and say, we're going to build a better Bitcoin and it's going to be faster. But the reality is none of those are as decentralized as Bitcoin. There's not as many nodes around the world. It's not as easy to run those other networks as it is to run Bitcoin. And the reason for that is because there's only a block every 10 minutes. Which means that it's constrained in terms of how many transactions can get in there, which makes it easy for everyone to validate. So in Bitcoin, we optimize for decentralization and security over speed. Yeah.
Thank you.
Yeah, good call out. So why can't everyone use Bitcoin like money? Well, let's do some math. We've got 8 billion people. Maybe everyone's doing like 2 transactions per day. Maybe you get a coffee in the morning, lunch. It's probably more than that. So imagine you need 16 billion transactions per day. That's 185,000 transactions per second. That's not even what Visa does, right? So how are we going to get it so everyone can actually use Bitcoin? So right now we only have 7 transactions per second. We really need a scaling solution. So what is Lightning Network? Lightning Network is a concept that was invented back in 2016, It's a scaling solution. The idea was, well, we might not be able to go out there and set this up such that we can scale Bitcoin itself. We might not be able to set this up so that we can get Bitcoin to 185,000 transactions per second. But what if we could allow for people to settle outside of the Bitcoin blockchain and then have it settled later on? Just like if you have imagine you have a bar tab, right? You go in there, you start a tab, and you might buy like 4, 5, 6 drinks during the night, and then at the end you settle. This is basically the idea that Taj Dryja had in 2016. Oh yeah, I already said that. Think of it like a bar tab. So how do Lightning channels work? So imagine I go get coffee every day. So I'm going to go and I open a channel with Starbucks, and we basically kind of have this shared wallet. So me and Starbucks, we set up a shared wallet together. Then after we've set up this channel with each other, I'm able to go to Starbucks every day and I can make payments. So I basically start a tab with Starbucks. I make those payments every day. And maybe I do that throughout the course of a month. We have a channel open for an entire month. At the end of the month, we go and we can actually close that channel. So I've entered into a Lightning channel with Starbucks. I make my payments every day, and then I settle at the end of the month. And that way, instead of there being 30 transactions that need to go individually onto the Bitcoin blockchain, instead, I can just have 2. One to open the channel and one to close the channel. So imagine you put 0.01 Bitcoin in a channel with Starbucks. You buy 10 coffees over the course of a month. Final settlement, you get 0.005 Bitcoin back, and Starbucks gets the other half of the channel. So that means you only need 2 transactions, one to open and one to close. But what if I now want to go over to Walmart, right? I don't have a channel open with Walmart. I have a channel open with Starbucks. Well, what I can do is I can pay for something at Walmart through Starbucks. Because what happens is I'll send a payment to Starbucks and they route it to Walmart. And that basically allows for me to route through my Starbucks channel to Walmart. And this is basically how we scale the entirety of the Lightning Network. It means that I don't need to have a channel open with every single person in order to scale the whole thing. So what's great about this is Lightning is peer-to-peer, right? There's no central authority. It's just like Bitcoin. So with traditional banking, it's you and the bank, right? It might be you, the bank to the merchant's bank, and then the merchant's bank to the merchant, right? So imagine I'm making a payment using Visa, right, at the store. Well, Visa's going to take 3%, right? I'm going to use my Visa account, and then Visa's going to go and settle with the merchant's bank, and then the merchant is then going to go and get the funds. This way, it's directly peer-to-peer, or it's being routed in the middle, but the fees are extremely low. You're not having that 3% fee. You might be paying 1/1000th of a cent, for example. So yeah, with Lightning Network, it's you to the merchant directly, or you to another merchant to that merchant. And it's all settled on Bitcoin. So what's great about this is Lightning really preserves Bitcoin's properties, right? It's just like Bitcoin, but it's faster and cheaper, right? It still has those original properties. It's still scarce, right? It's still durable. It's still portable, but it's just faster. So instead of 30 transactions without Lightning, now we only have 2, right? You have an open channel transaction. You have your 30 payments that you do throughout the month for buying your coffee. And honestly, these are super cheap. Like usually when you're transacting on Lightning, it might be like 1 cent. And then you have your closed channel transaction. So we just went from, maybe you're paying $1 per transaction every single day that you're transacting on Lightning, and it's $1 every day. So instead of you paying $30, now you're paying like $2 for opening the channel and closing it, which is substantially cheaper. Okay. So what's cool about Lightning is the structure, right? We talked about this idea of having a shared wallet, right? So when I open that channel with Starbucks, it's kind of like me and Starbucks have a shared channel, and then we can transact off-chain without anybody knowing about it. But what if I want to do what if I want to do something like a Bitcoin-backed loan? Or what if I want to do a bet with somebody? Is there a way I can use that same structure of having a shared wallet to allow for me to be able to create like financial contracts on Bitcoin? And this is what a DLC is, discrete log contracts. It's basically smart contracts on Bitcoin using Lightning-style channels. I just want to stop there for a second and double check, like, did everyone understand like Lightning so far? Okay, amazing. So it's the same concept of Lightning, but for contracts. So in Lightning, we have two parties create a channel. They make payments, and both parties decide the final balance, and then they can go and settle that on the Bitcoin blockchain. With DLCs, which is what my company works on, two parties go and create a contract. The contract depends on real-world data. So imagine I want to do a Bitcoin-backed loan, and I say, hey, I'm going to put up 2 Bitcoin, and I want to get a loan for $100,000. What we can do is we can set that up such that the lender and the borrower both enter into this shared wallet on-chain. We have an oracle. Maybe that's a trusted friend, or that could be a trusted organization that reports on what happens in the loan, right? Did the loan get repaid? Did the loan go into liquidation? And the oracle can report on that information and then determine what happens in that shared wallet. So the oracle is able to go and look at real-world data, like say the Bitcoin price from Coinbase. Did this loan get liquidated? Let me go look at the Bitcoin price on Coinbase, and it can create a digital signature that automatically settles the contract. So you might have heard about smart contracts in other blockchains like Ethereum, and you might have heard about things like a smart contract hack. You might have heard about Bybit. Bybit, North Korean hackers took $8 billion from Bybit because their funds were in a multi-signature wallet, which was really a smart contract. All other blockchains are very, very complex in the way that they're designed. And they have very kind of complicated smart contracting languages for designing these contracts. On Bitcoin, it's actually extremely simple. And it's built into the protocol itself, how to actually build these contracts. So these are very, very different from your typical smart contracts that you would see in Ethereum, where you might be vulnerable to a smart contract hack. That's kind of the big advantage of Lightning and the big advantage of DLCs is that at the end of the day, you always have a key, right? You always have a key to your Bitcoin. You can see where it's stored on the Bitcoin blockchain. And so if anything goes wrong, you might have a legal agreement that says, hey, this is my Bitcoin, but they might run off to Costa Rica, right, with your Bitcoin, or they might run off to Iran, wherever. At the end of the day, you might have a legal agreement, but this also gives you basically an agreement inside of the Bitcoin blockchain itself that you can enforce, which just gives a few more guarantees. Yeah. So yeah, that's basically what happens is Alice and Bob, they can put some funds. It's like, say you're doing a bet, for example. Alice and Bob both put 1 Bitcoin into the DLC. Each of them have a key. They set the terms of the bet, which might be, hey, I bet that Bitcoin's going to be above $100,000 by the end of the year. And Bob says, no, that's not going to happen. At the end of the year, the oracle goes and attests to the price. So Alice and Bob both have a key. And then when the oracle creates the signature, it's actually set up such that the oracle is only able to create a signature for the events that Alice and Bob have defined ahead of time, right? So the oracle can't suddenly say, hey, actually, I'm just going to give the Bitcoin to myself, right? They can't do that. They can only say, oh, in this case, Bob wins. In this case, Alice wins. Or maybe it's a tie in one of the cases. So you can kind of constrain it in that manner, which is really elegant.
Is Oracle live AI?
Oracle's just like a friend that you trust to report on real world information. But it could be a friend, it could be an organization, right? Something like Coinbase could be an oracle. Something like or like Kraken, any type of exchange. Bull Bitcoin could be an oracle if they wanted to. Yeah. Okay. So yeah, this is the really nice thing is there's no trust needed between Alice and Bob, right? Alice and Bob can actually go and create a bet, or they can, maybe they want to enter in a Bitcoin-backed loan. Maybe Alice wants to get a loan and Bob wants to lend to Alice. They can do this without having to trust each other. All they need to trust is that oracle, that oracle is going to report on the information correctly. So these are really useful for a couple different things. These are useful for Bitcoin-backed loans. useful for derivatives trading. This is something that we built at Atomic to allow for people to trade options contracts using DLCs. Insurance products as well. You could say, you could even use it for life insurance, right? Like, okay, if someone dies, like pay out this Bitcoin. It can be really useful for cross-border settlement too, right? Imagine someone wants to sell, imagine there's a big whale. They want to sell 100 Bitcoin, 500 Bitcoin, and on the other hand, you have someone on the other side of the world that wants to give them stablecoin. This is a common thing that happens where, it's like, okay, well, how are we going to settle this? Like, are you just going to, like, send me the Bitcoin, send me the Bitcoin, I promise you I'll send the stablecoin, right? It doesn't work. But you can actually have the seller of the Bitcoin just lock it into one of these contracts, and then the other person sends the stablecoin, and then you have an oracle that reports on that and says, yes, the stablecoin arrived at this location, or no, it did not return the Bitcoin to the original place, which is really nice. So yeah, DLCs really bring traditional finance to Bitcoin without giving up Bitcoin sovereignty. This is something that I'm working on with my company. So I was previous with Atomic Finance. Now we're working on Lagos.finance. We're actually using DLCs for Bitcoin-backed loans. Folks are going to be able to very soon deposit Bitcoin, lock your Bitcoin in a DLC. You'll be able to borrow dollars, whether it's stable coins or dollars in the bank. And then obviously you'll have automatic settlement with oracles. We're working right now on getting set up with a bunch of like Anchorage and Magnolia, a couple different custodians that are going to be implementing the Oracle functionality. And one of the other really nice things with DLCs too is that you can have multiple oracles, right? You don't just have to have one. So you could have 3 oracles, you could have 5. So now instead of, in the 2 or 3 example, instead of you having to rely on that one third party, now you can rely on 5 of them to all report on the same thing. So yeah, we're really excited about this. There's a lot of like Bitcoiners out there that are like basically they want to be their own bank and they became their own bank, right? But now they're having trouble getting access to the traditional financial system, aren't able to get mortgages, maybe don't have great credit. And so Bitcoin-backed loans is a really good solution for them if they want to buy a house, if they want to buy that villa in Italy. It makes it a lot easier for them to do that.
Who's the lender? Like, who's lending?
Yeah. We've got a couple folks lined up for lending. So we've got individuals set up to lend. Usually it requires large lenders because it's typically like one lender to one borrower. And then we're also likely going to be setting up like a fund for lending as well, like just a pool of funds that we'll be lending out. So then that will make it easier for individual lenders. But we've got a couple. Okay, well, let's chat. Sounds good. Awesome. Okay, so key takeaways, Bitcoin scales Lightning. Lightning obviously preserves Bitcoin sovereignty, right? It preserves the same properties of Bitcoin itself. DLCs enable smart contract, and basically you can do, obviously, cross-border settlement using DLCs. And DLCs they've been around for 5 years, but haven't been adopted that much. But I think over the next 5 years, I think we're going to see it used a lot more, especially for larger transactions where people are worried about smart contract hacks, where they're worried about, where exactly are my funds going? How can I verify where my Bitcoin is going? So we're really excited about that. Awesome. Well, that's it for me. We'd love to chat about wallets and securities, Lightning Network. But yeah, thank you for having me. Cool.
I've got a question.
Yeah.
What are the incentives for like an oracle to be involved in this?
Yeah, typically it's you have different companies that are running a particular business, and they'll usually approach an oracle and set up an SLA or some type of other agreement with that oracle and pay them for running their service. We thought about this for a long time of like, it would be great if it was just individuals coming together. But then at that point, there's not really any incentive for the oracle. So I think it's really just projects like, we're doing Bitcoin-backed loans. There's other people doing derivatives. They'll usually go and approach oracles and go and run it. Or it might be that project that's running their own oracle and maybe they have an external market maker or external lenders. So it really depends on the project. Yeah, good question.
So is it like, an oracle is basically like an exchange?
It is in that aspect of like reporting on the data, but the key thing is that they can't steal the Bitcoin individually, right? So in exchange, they could just rug pull everybody all at once, whereas in Oracle, typically it's set up like an Oracle might need to make an attestation in the next month or in the next like 3 months. So maybe they attest to the invalid information, today, but now nobody's going to trust them, 3 months from now. And individuals are probably going to go in and exit out of that contract because you can still collaboratively exit the contract. So it would be much, much more difficult for them to rug pull everybody. Yeah. And the other thing too is like you can obviously set up, it with 3 oracles or 5 oracles, whereas you can spread your funds around on different exchanges, but it's a good chance one of them is going to rug pull. Yeah. Good question. Awesome.
Is it what is the majority of the use case right now? Is it like Bitcoin-backed loans, or is it the derivatives market that's been created with these?
Yeah, I think the biggest use case. So we were running it with derivatives for quite a bit of time, and now DLC Markets has popped up as well, and they're also doing derivatives. I think they're doing more like iceberg, like very large trades, and then Bitcoin-backed loans is by far like the biggest use case. Yeah.
Who would you say your main competition is?
Probably Lava, although they're more focused on they're very focused on retail. So if you're just looking for a small loan, I would say Lava is kind of the perfect solution for that. We're focused on larger size.
Does Lava use these?
They use DLCs as well. Yeah. Yeah.
So Ledin doesn't.
Ledin does not. They're custodial. They did a phenomenal job, though, I will say, in like 21, 22, being one of the few lenders, like Bitcoin-backed loan providers, that did not go under. So kudos to them. They don't rehypothecate their Bitcoin, which is really great.
There's an option too, but yeah.
There's an option too to get to.
Lower rates if you rehypothecate.
I see, but yeah.
They're just Bitcoin only now. They just announced.
Oh wow, that's great. Amazing. Yeah, I know that they live down the street. They're down the street in Toronto from me, so they're very, very, very cool guys. Yeah.
I have a question. It's not about the presentation, but I just love hearing everybody's answer. What is Bitcoin to you? What is Bitcoin?
Bitcoin is an abstraction on energy, I think. So like, what is it? What was it? Henry Ford said 100 years ago that like there would be an energy currency one day, and I think that's Bitcoin. So, thank you. Awesome.
Great.
Well, thank you for having me.